and this would be a contrarian trade for the USD CAD. So we're buying the dollar in the USD CAD, we're selling the dollar in the NZD USD. Good afternoon, ladies and gentlemen, and welcome one and all to the Markets Now session. Today it is the 8th as we head into the midsection of October. Looking at relatively quiet markets on the scopes this week so far. It's been a bit of a mixed bag. Yesterday certainly didn't prove to be any different than the continuation of the mixed sentiment that we have been seeing so far, but we have had a couple of notable call-outs. One, at the very top of the food chain, is gold, which is currently trading at 40.40 and hit an all-time high of 40.49.95, basically 40.50 against the United States dollar, which is absolutely incredible. Incredible. Look at this thing. Just one big straight line right up to the highs there. If we look at the weekly time frame, it's even more exaggerated. There we go. Look at that. Hardly even fits on the screen. Yeah, incredible move. Absolutely incredible move. This is a very, very big telltale sign of the state of the US economy and ultimately the risk in the world at the moment. There is so much mixed risk, economic, geopolitical, macro and global, you name it. There is risk everywhere at the moment, a real level of increased risk. And gold is just getting absolutely pumped as a result of it. Really, really inflated. It's amazing. It really is. I mean, at the beginning of the year, I was saying this year's going to be the year for gold. We're going to go back to gold. And, I really did not expect to see this level of gold prices in 2025. I think if I don't remember exactly what my calls were at the beginning of the year. I think I was around 36. But yeah, to see 4K, yeah, absolutely crazy, guys. Really, really, really mad out there at the moment for gold prices. But anyway, that's that. Good afternoon, Scotty D. Good to see you, mate. Good evening to you, Matthew and Braden. Good to see you guys. So yeah, it's just non-stop at the moment, isn't it? It really, really is. Absolutely non-stop. Absolutely amazing trend continuation as well. This would have been our trade from yesterday. This was not a live trade, unfortunately, because the break, close, and retest only had a successful completion at 8 o'clock in the evening last night. That's GMT, of course. By which time I was already screens off and I didn't manage to get the trade in. So that was that. Which is a good segue, to be honest. We will have a little bit of a recap here. We did not see anything. There was nothing at all that I personally could have taken yesterday. The markets were a real mess. It was a nice move after the fact, don't get me wrong. But in real time, it was a difficult one to call. We had this big fake out up here, big surge back down. We did reach the previous low as well there, and then we've come back up. So in hindsight, of course, that would have been a really nice move, but in real time, it was unrealistic trading conditions there. There could have been ample opportunity, I suppose, had you been patient. We got the break close retest. There was a break of structure trading opportunity at about 3:30. That went all the way down there, but I wasn't convinced. We would have been waiting a hell of a long time for that to complete after the fact as well. NAS 100 was this monstrosity. And this one, we had a dip down here. This was at 2:30. after making that 230 low, just retracing my steps, I was then thinking to myself, well, we've already formed a low there. We had 4 candles. I don't really want to get in until we break that low, and that's not going to leave enough of a trading margin. So then I was waiting for the potential for a buyback from liquidity down here, and my breaker structure point was there. At this point in time, we're at 4 o'clock in the evening. We never got the breaker structure, and then the market fell, and we actually dropped down to this low down here, which if we go back up to the 15-minute time frame, again retracing our steps, that low is this low but not that low. So in real time, when you're trying to map this out, it was incredibly difficult to do so. So yeah, it was difficult. It was difficult trading conditions yesterday for myself. I'm not saying that it would have been difficult for everyone, of course. We're all different. But for me, I did find difficult trading conditions yesterday, without a shadow of a doubt. Now, in terms of going down to the FX markets, then we took a loss on the USD Swiss. That was this one. We made it down to about 60% of the TP, maybe 55% towards the target profit. Came back up, instant stop out on that one. We had the NZD USD, which was a beautiful sell-off. Really nice big bar. This was about 2 o'clock in the morning from fundies. Really beautiful trade though, to be honest. Regardless of that, came right the way down into big liquidity. Got the big knee-jerk reaction there from the commercials. So that was a pretty decent move as well. So far, it would have been probably would have been a prudent idea to get the buyback on that one, but because of where we dropped so low, didn't we? Down to this area down here, and I was not entirely sold on the fact the market was just going to continue going straight up to the highs. So I think we'll probably look for the pushback down into liquidity before we get a second leg up, because we haven't had a decent retest yet prior to this. Obviously this move's yet to take place, isn't it? But we haven't had a decent retest yet. So I'll be keeping my eyes peeled on that one. That ended up being a 1 to 2.49 though, so that's pretty good. That offsets the risk that we took on from the USD Swiss. This was our contrarian view trade, if you remember from yesterday's session. So we have covered the loss of the USD Swiss, and we have gained extra profit on top, which can go in the tank. Then we got the pound yen. Now this was extraordinary, I would say. I mean, it really, really was quite an extraordinary move. We came down, we bottomed out about 1 o'clock in the afternoon. We were looking for the continuation from this area. And I mean, look at the sizable move that we got here. I mean, this is a really, really sizable move from that low up to the current trading high. So what are we looking at there? From that low to the highest point in this move, that's 1.6% in pound yen, which is a really big, sizable move. You look at the daily time frame, it goes to show exactly just how much of a move that is. And probably am anticipating this one coming back down as well, to be honest with you. So maybe we'll come back to that one. And then we had the AC, and the AC is currently here at the moment in a loss. Well, not much of a loss, to be fair. It's more like break even, but we are currently in that one and it is underway. So we will wait to see where that one goes from here. We've got a break close and a retest going on at the moment of liquidity. Currently trading in 91.71. And yeah, we're just going to wait to see how it goes. I'm still quite confident in the AC. There's no reason to think otherwise about that one at the moment. There's nothing really too wrong with it. We didn't incorporate any energy market trading opportunities yesterday, and for good reason. I mean, nothing really presented itself. Natural gas at the moment has continued trading sideways, so there's nothing at all that's changed from yesterday, to be honest. Nothing at all. We've got UK Brent. We were looking at the long. This one's just momentarily ago triggered. And that was from the levels of 66.72 up to 68.90 via the breaker structure. And then we've got US crude, which is predominantly doing the same thing. We're trading back inside the range now. Really nice range in crude. And that's that one. You do have the opportunity to take both of those. Obviously, you will ultimately be doubling up on your risk if you do. So the idea to take one or the other is probably the best course of action, especially at the moment. So that's basically where we are now. In terms of the DXY today, it is trading at 98.81. We did have a little bit of a breakout. It wasn't anything too sizable, but we did have a little bit of a nudge above, and that's at this level in here at the moment. So as you can see there, a little wick above, got to 98.98. It's come back down at the moment. Bit of a retest, I imagine, of this breaker structure point, but it's still got a lot of work it's still got a lot of work ahead of it to be breaking through the structural point between 99.26 and 100.3. So lots and lots of money in the market in there at the moment. I'd be surprised in its current state from a macroeconomic point of view to have that strength to push through. Gold is going to be your sort of main leading indicator as to whether the DXY's got what it takes to break through there, and it definitely won't be this week. I will eat my hat if this market goes and crosses. I even crosses 99.50 this week. I really would be mega surprised. Moving across to the heat maps, then looking at the stock markets today. In the S&P, it's a bit of a mixed bag. I would say mixed/negative. We've got most of the gains that took place yesterday have been wiped out. CDs are down. We've got ETs, which are down/neutral. We've got TS, which is down/neutral. It's being carried at the moment by APP, which is at 7.64% growth. But most of the big ones, Oracle, Google, Microsoft, Meta, Netflix, are all kind of soft, I would say, soft numbers so far. Netflix got 2.39% up, but Google's down -1.86, Oracle -2.52, and Microsoft currently down at 0.87. We've also got CRM and CRWD down here, both at -2.46 and 2.28 respectively. So it's looking relatively weak, I would say, across the board, with a couple of notable call outs. AMD's having a good time, Dell's having a good time, Guild's having a good time at the moment as well. That was one of our more recent last few week equity picks in Guild there, and that one has actually been doing quite well. And yeah, the rest of it's pretty great. It's pretty great out there at the moment in terms of the US markets. Now, in terms of the FX space, the largest, most significant change today has been the CAD yen, and that is at a whopping 0.6% daily change. Really does go to show where the markets are at the moment, because that is the biggest one of the day. Below that, we've got Aussie yen, then USD yen. So yen crosses are moving. We can see the trend in that one instantly. If we go down, the next batch of movers start at 0.34%, which is basically nothing. The market's basically out moving there at all today. So we're just looking at that trend continuing, really, aren't we? We are on Wednesday now. It is midweek, which should be the turning point for things, but it's just going incredibly slow. Now, for those of you who are not with us every single day, but you do tune in for the weekly catch-ups, good afternoon to you, Cora Tim. Good to see you, buddy. Hello there. Hello there, A. What's your name, A? Glad to have you on board, and welcome to the community. Good to see you, for sure. I'll call you A for the time being. But yeah, for those of you who do just tune in on the Wednesdays and you're not with us every single day for these events, I have been explaining or expressing more specifically that this week will be extremely quiet. We have no major macro drivers, even in terms of the fundamentals at the moment. It's very dry out there. There is a lot of risk at market. The US situation at the moment is extremely troublesome. So there is that to contend with as well. So yeah, there's a hell of a lot going on that we need to, I don't know, potentially be aware of, I suppose. But also not trading. There's not going to be a great deal of trading activity. Definitely not going to be a great deal of trading activity this week. So yeah, that's no worries, man. No worries. That's fine. Good to see you, Ali. So what we're going to do then, it's probably not going to be an exceptionally long session today, but we will go through, try and put together a bit of a book. We've got the FX space, metals, energies, indices. Indices, we're definitely going to be trying to capture something from these today. Yesterday, as I have already explained, was a complete blowout for me in particular. Hopefully today is going to change that. We will start in the FX space, work our way up through the list. And yeah, we'll try and put together a bit of a trading book for everyone. But no promises no promises for it being it being a robust session, because it's just not there at the moment. The trading volume just isn't there. So starting, well, definitely not starting with that. Let's start on the USD CAD. So USD CAD at the moment, nice range lows, range highs. Okay, so nice range. I think we can certainly look at considering this. We did consider this one yesterday, but then swapped it out for the USD Swiss instead, which naturally did not go well for us. So I do quite like the USD CAD. Good breaker structure, very good range, very established. And yeah, everything about this kind of makes sense, I suppose. So entry, target, and a stop loss, which is going to be, I would say, about here at 139.40 for a 1 to 2.2. Seems like quite a nice opportunity at the moment there for the UC. Happy to have a stab at that one. Then we've got the NZD USD, and this would be a contrarian trade for the USD CAD. So we're buying the dollar in the USD CAD, we're selling the dollar in the NZD USD. So the parameters surrounding this would be a retest, yet again, back into liquidity. That would be an absolute must. So for price action to come back down, reach the buy point somewhere in here, inside the gray, and then the continuation thereafter with an entry, a target profit, and a stop loss below that point, which would be yielding approximately a 1 to 2.5. We don't know where the price will bottom out yet, so we'll have to take a view, we'll have to take the final view on it when it actually does achieve that. But this is a good breaker structure point, so I think if the market can come down below this area and then reject and come back up, it would make for quite the opportunity if that part of the process does come into play. So happy running with that one for the time being as well. I'm going to change that up for a green. Looking next up, the NZD CAD. So we've got a break, close, and retest taking place at the moment. It's actually quite the retest, isn't it? Don't necessarily want to be stuck in an NZD CAD with a USD CAD though, I must say. What about NZD JPY? Any good? So very stereotypical news release. We get the initial knee-jerk reaction. Prices fall. Everyone loses their money. It rests at the bottom for a while, and then the market ends up exactly where it was supposed to be in the first place. Very, very stereotypical move after a news event like this. So we could look for the continuation back up to around 88, 85 via the break and structure up there, couldn't we? I mean, if we look where... Yeah, I'm going to hold on to that one. We will revisit that one, possibly. I want to see the rest of the opportunities at the moment. Pound against the dollar, no, that looks like a complete and utter state, so I'm not having that one. Pound against the yen, we didn't take any losses on this one, but we did not certainly make the best use of it. I'm still very much sold on the fact that we're going to get a bit of a better retest on the daily chart. All right, there's a lot of commercial money up here, a lot of commercial profit. Look at this sizable move. You can't tell me there's not commercial money in the market there waiting to come out. That being said, mind you, it's not at the commercial point yet, is it? That's the all-time high back there, 208. We're making a run for it now. Price line's trading at 204.69. We've got this in here. And that is the final point of liquidity before we get up to the big one. And as it happens, that's where the market's rejecting now. Now, if we go back in time, we look for the next point of inflection. I would say there's a point of inflection there. Now, if we go down the 15-minute chart, let's have a look at that. Okay, so that does make sense. We can see that there's been multiple reactions to this point. We've had a break close and a retest of it. We can probably thin it out a little bit, can't we? Am I going to be able to do that? No, that's fine. Right, let's thin this out a little bit, this one. So arguably going to be about there. We've already had this point in which this would be utilized as the BOS. Market's trading a bit too far down from that one for my personal liking. So what I'm going to do here is I'm going to place an alarm back up there. If the market hits that alarm and it hasn't hit the low first, then there's going to be a short trading opportunity in the pound yen. There's definitely not a long there for me yet. I am happy taking a long at 206 though, to take it back up to 207.26 for 130 pips. That would be quite nice, so I can place another alarm in there as well. But for the time being, that's all we've got. So we'll let the pound yen be. Pound against the CAD. Nice floor. Range ceiling directly above price action. Not a strong margin. What about underneath? Lots and lots of choppy price action in this one. Tons of lows directly below price. So it's a bit of a rock and a hard place. Unfortunately, that one. Looking at the pound against the Australian dollar. Not the nicest range, not greatly established in terms of its highs and lows. Much prefer the USD CAD, if you look at that in comparison, a much tidier range than our GA, which is kind of scatterbrained. It's a bit all over the place, isn't it? We've got the low down there to beat. So this point in here, which is pretty sturdy. We get the breaker structure underneath there. I think, actually, ladies and gents, that might be a relatively decent opportunity. Let's have a look at that one. So that's around the 50% point where the price line is at the moment. Whoops, not there, about there. And that's going to yield a 1 to 2.2. That's a 21 pip margin there. It's a 10 pip stop minus the spread at 0.8. Yeah, that's not bad. That's not bad at all. I'm going to take a stab on the GA short. Right, moving up, Euro USD. I'll tell you what I'm going to do super quick. I will send you these charts now. Simply because I believe that the GA in particular may end up triggering soon. Upload 1, 2, 3, 4, 5, 6. Okay, let's have a look at our Euro instruments. So Euro USD for me is a no-go right now. Euro NZD, no, I don't want to get on the back end of that. Euro yen, we're already considering options. Euro CAD. That's a nice floor in there at 162. Lots of buying interest coming into the market around this area, generally speaking. We have quite the ceiling at 162.45 as well. Possible opportunity here. Let's have a look at this one then. So we've got that level in there, which would be used as the TP, and we've got the floor down below about here. So let's have a look at this. Okay, breaker structure point for this trading opportunity would be situated there. And then we look for the push into liquidity and then back out again. Whoops. That one goes down there, that one disappears. So let's have a look at this one here. We've got TP, we've got entry, and we've got stop loss. What's that then? 25 pips on the long, 11 on the short. That's not bad. That's actually not bad. Quite like that trading opportunity. That's going to be the next one. Good trading margin. Very nice point to consider buying back from. Very, very eligible TP there as well. Probably a little bit pessimistic. It would probably go higher, but I'm not gonna play around with it. 162.40 is the point at which I want to get out of the market on that one. So we'll just run with it. Right, let's have a look at the Aussie pairs then. Well, we've already got Aussie CAD going, don't we? To be honest, I don't want to be doing anything more to do with the yen. Aussie NZD, big correction after the fundies. Ended up exactly in its current trajectory anyway. From this point, probably has a little bit further down to go. I'm not too much an overall fan of that one either. I think we'll leave it there. Look, to be honest, I've actually come up with probably more than I would have assumed. So we've actually added the Euro CAD, pound against the Oz, pound against the yen potential opportunities, NZD USD, and the USD versus the CAD. So we've got CAD, we've got CAD, and we've got CAD. We're actually quite exposed to Canadian dollar, but that's fine. 3.25% on both sides of the market, not a problem at all. So let's go then. Let's head into the metals. So this afternoon, gold currently trading at 40.38 at the time where we begin. Looks like it wants to range a little bit. Obviously, we did not get that trading opportunity. A little bit sore about that one, probably. Thinking about where we're trading at the moment, we've got a floor in there. We have a previous ceiling. Let's say here we've got a very nice clean trading margin. Down to there, if we just look at that breaker structure point about here and drag that one along, then we could look at the retest of this level for the continuation. So entry, target, stop loss, 50% point, those two up there. You're looking at around a 1 to 2.32. Let me just, yeah, I've already done that. Yeah. And of course, we're not going to forget about the break close retest of this level in here. So this will take a little bit more process. We wait for the breakout, the retest of this level. We need to see the retest of that, and then the continuation. The trading opportunity, you're going to set your stop loss up first. You want the stop loss at around, I would say 40, 43, somewhere around there. And you're going to bring your target profit up, and you're going to bring that up to a 1 to 2.1. And that's going to be your trade idea approximately, because we need to find out where the breaker structure is. So it could be a little bit better, could be a little bit worse, but approximately it'll be around a 1 to 2.1 to a 1 to 2.4, I would say, at the very best. Download. Let's check out silver quickly. Hey, good afternoon, Calvin. So looking at silver at the moment, we've got a nice ceiling in there. We've got the break close retest. Market's losing a little bit of steam here. Let's check out the daily time frame. So this definitely not as extreme as gold. Doing incredibly well, don't get me wrong, but it's not quite as extreme as gold. And rightly so. But at the same time, it doesn't make me really want to be involved in any kind of longs. I would probably prefer to go short. And we don't necessarily have a fantastic target for shorts. It's all over the place, the lows around here. It's not as controlled as gold's move, which means we don't have as clear levels of liquidity. So probably going to give that one a pass. Now, let's have a look at natural gas. Currently down minus 1.62%. We have actually dropped a lot since we first looked at this one about 20 minutes. No, sorry, we're at 2 o'clock. It's about half an hour ago. We've got a decent margin in here, but I have been tentatively moving away from trading it. What I really want to see, well, I just want to see some more consistency, less of the wild swings that we've had in here at the moment. I think if we can get a break under this, we're probably going to be in the runnings up for a decent short. Please do your due diligence when trading natural gas. I know some people have a problem with trading it due to its expense. It is an expensive asset to trade for some, so please just check what the cost of trading it is before plugging it in, because you might have a nasty surprise at the end. But I think looking at NG based on the parameters in front of us, maybe at a 1 to 2.4, 1 to 2.5, with a stop at around 327 is going to be the viable option for a potential short. If it goes long, it's not going to go long today at a point where we're going to be left out of the trade. Even if it does break out long this afternoon, I don't see it surpassing 336, which is where we would need to be to get the long in. So I'm actually happy considering the short opportunity in NG there. Oh, it's already green, that one. Right. Okay, so that's energy markets. Now, US indices this afternoon. I think we're going to just do a complete wipe on the total thing here because it's just crazy. So here we go. Now, we've got an ascending level running up through there. If we copy and paste this, we have a very, very nice established point on top of that as well. And in terms of our liquidity, we have, I think I suggested it was about there, but it was very inconsistent with varying degrees in the lows below. Not very established, to be honest. We copy and paste that one. We can bring that up to the highs, and we see very much the same trend, a real lack in consistency in where the established points of liquidity are in this. But we can look at what is the most probable outcome. Now, judging from where the market's currently trading with these ascending levels, it's going to be quite difficult to say, okay, well, we're going to wait for a break of this level to trade it to there. Because, to be honest with you guys, it doesn't make sense from a margins point of view. However, it's good to have the understanding that that is there. So we're going to leave that one in for the time being. We can just bring that down a little bit. We're going to remove the bottom one, because down at the bottom, we have equal number of lows down here, like equal level where the lows are down here, which can then be construed as a good foundation for the breaker structure. So we can have that there, for example. Now, in an ideal world, we would want the price action to come back into liquidity and come up, but we're not going to be able to take it up to 24.99 because that is too far for a singular trading session, especially when we have next to nothing going on in our markets this week. So my proposal is for the market to come down here. Based on the market coming down here, we break back through structure, and the target profit is going to be at the top of the ascending level that we've got in the charts there. Now, you may be thinking, yeah, but what about the bottom one? But the bottom one is already going to be broken, I would like to think, by the time we have the structural point broken. Around abouts. Hang on a minute, that looks a bit weird. Did I copy and paste that? I can't remember if I did or not. There we go. So that's where we are with that one.
So your breaker structure points there, your ascending levels just a little touch above that one. Have that in your chart. Your trading opportunity will then essentially be channel continuation above the structural breakout point, and you'll be looking to clear the margin between these two ascending levels. Your stop loss in this instance is either going to be very conservative at around 24,855, or you do have the possibility of taking a little bit more of an aggressive trade and bringing that stop loss up to around a 1 to 3, I would say, because then that's just over the 50% point of the breaker structure area. And if you, so long as the price action is trading inside this level, you're probably, I mean, the price action is trading here at the moment, right? So you're probably going to be about there. And that's going to be a trading opportunity in the NAS 100. If it trades short, well, if it trades short, it trades short. I'm not really a fan of trading this one short today. It's going to be a break close retest continuation. Your target profit for it will be about there. And that is a viable trading opportunity, but it will take, I would say, someone who has been following along with the process for a long time to execute it properly. Because remember, these are market orders, guys. These are not limit orders or pending orders. There is no automation to this. It is you and the charts. Which I don't really suggest. I wouldn't really want to suggest to you if you're not following along on a daily basis with me. And then with the US 30 Dow Jones, I can't remember if I took a picture of that one, so let me download. Right, and then with the Dow Jones, to tie up our trading session, a little bit better in terms of the established points. We've got the lows down here. This one thanks to yesterday predominantly. We've got the highs up there as well. Again, a little bit better established. We've got 1, 2, 3, and 4, which are quite nice, excluding the fake out that we had. So this makes sense. It's not bad. Very wide trading margins. This is a 15-minute time frame. It's a huge trading margin to try and execute. So remember, we're going to be on a 1-minute time frame. I would say that this level in here is really where the magic is. So if we get a breakdown from this level upon the open, bearing in mind, guys, we're already at 7 minutes past 2. So we've got literally 23 minutes to go before the bell rings this afternoon. This is the level for the TP. The breaker structure point for a successful position on here is probably, I'd say, around there, maybe. Yeah, possibly at around there. It's pretty damn aggressive. I mean, it's a wide trading margin. It really is. So if we say there, target, and of course the stop loss, which is going to be at the 50% point of the liquidity zone above, then you're looking at a 1 to 2.36. You do have the position of buying back in if the market does reach this low down here, all the way back up. If it's a long, it's going to be a break, close, and a retest. Okay, so again, imagine the long for the Dow Jones being exactly the same as the process to the short of the NAS 100. Okay, so the NAS 100 short is the US 30 Dow Jones long, and that will require a full breakout close above, manual retest, and then execution, looking at the continuation leading up to about 46.88 with a stop loss modestly at about 46.76, I would say, for a 1 to 2.56 return. Now, it's good yields across the board on all these trading opportunities today, to be honest. There isn't anything that I would say looks a bit flaky. So, yeah, that's basically where we are. Now, in terms of the calendar, I do just want to shout out because today, of course, is FOMC Wednesday. We have the FOMC minutes this evening at 7 p.m. It will be highly watched by many individuals around the world, and it will cause market volatility. So I'm just going to tell you now, if you are for any reason whatsoever stuck in a US stock market position, and it gets to, let's say, 5:30, get out the trade. Whether it be in profit, whether it be in loss, whatever, just get out the trade. You will be affected by slippage in an FOMC minutes. If there is slippage, of course, if there is market volatility, it's just not worth it. And based on what the markets have offered us so far this week and the kind of context that we're trading in, it's just not worth it. It's not worth having the money in the market. So just dump it. In terms of the FX position, I've got the USD CAD, which is our... Oh, and the NZD USD. I do beg your pardon. I do have that one as well, although this one looks like it's going to go straight to TP before it even gets to entry. So we may not even have to worry about the NZD USD, but we will only have one primary dollar instrument that will be affected by this evening's FOMC minutes. And frankly, guys, it looks like the USD CAD's coming to the end of the end of the range. We've actually got the first breakout that we've had since it was initiated back on the 3rd of October. So we may actually end up sitting that one out as well, which means we won't have any major US dollar exposure. The only thing we'll have majorly exposed to the FOMC minutes is gold, which at this rate is looking pretty good on either side of the market. So we'll just let that one be. And that's that. So, are there any questions? Yeah, no worries, Braden. Bearish flag on the NAS 100. Yes, Coratim. Yes, it is. Calvin, let's have a look at this one then. Euro Oz. Okay, breaker structure, 4-hour time frame. Below what appears to be a 50 EMA, looking good. Yep, previous low. Target profit. That's actually I'll tell you what, mate, that's a really nice trade idea. Yeah, really nice trade idea. I'm not sure the execution was on a 4-hour chart, looking at where the entry looks to be, but the initial breaker structure on the big bear candle, that's probably the 2 a.m. candle, possibly, was really, really nice. Yeah, really good. I like it. But if there's no further questions, ladies and gents, I'm going to wrap things up there. Wish you all a wonderful rest of the trading day. If you need me at all, I will be here for you. So please don't hesitate to ask me any questions or seek out any advice. And I look forward to hearing how you get on this afternoon with the US Open. So take care, guys. Have a good one, and I will see you then. Bye-bye.